Gold and silver bullion jumped to one-month dollar highs on Thursday in London, with gold hitting fresh all-time record prices in Euro and UK pound terms as US President-elect Donald Trump, set to retake the White House on Monday with a vow to impose universal trade tariffs on all imports, claimed credit for a ceasefire deal between Israel and Hamas after 15 months of war. Welcomed by foreign powers from Russia to Syria, Nato, the European Union and Qatar, the truce with Hamas wasn't put to Israel's cabinet for approval, however, after Prime Minister Benjamin Netanyahu blamed the Iran-backed militia for reneging on key parts of the deal, causing a last-minute crisis. "We have a deal for the hostages in the Middle East," said Trump in all capital letters on his Truth Social platform. "They will be released shortly. Thank you." With US retail sales data coming in below expectations, while new claims for US jobless benefits rose on the latest weekly numbers, the price of precious metals futures contracts in New York, meantime, rose faster still than London bullion. That raised the incentive for precious metals bankers and brokerages to move gold or silver from London, or to pay currently high EFP prices for switching a futures contract into physical bullion, ahead of Trump retaking the White House on Monday after vowing universal trade tariffs of 10% to 25% on all imports to the USA. There is no suggestion that the new administration will specifically target precious metals, or indeed raw materials more generally, says a note from Jonathan Butler at Japanese conglomerate Mitsubishi, explaining that Trump's targets will most likely be value-added finished goods, including cars, electronics, and chemicals, i.e., things that the US could make. On a raw supply-demand basis, the US is fundamentally in a deep deficit across silver, platinum, and palladium, notes Swiss Bullion Refining and Finance Group MKS PAMP. Global silver supplies lagged global demand by a wide margin for the third year, running in 2024, according to data from specialist analyst Metals Focus, thanks to record industrial silver demand. Thanks to the USA's supply deficit, white metals should not be targeted by Trump's tariffs because they are critical to many key technologies, says MKS PAMP strategist Nikki Shields. But their associated industries will likely be targeted, which will leave them with unintended consequences and price dislocations. With only one business day left until Trump's inauguration, and with gold bullion typically transported in the hold of passenger air flights, New York gold futures for February settlement traded $30 above London spot prices on Thursday, widening the CME Exchange's COMEX contract premium from yesterday's level of $23. Silver, in contrast, is typically transported from London to New York by sea, making last Friday the last opportunity to book a standard shipment before Trump takes the oath of office for a second time. Yet March silver futures, now the most active COMEX contract for the more industrially useful precious metal, today traded over $1 higher than London bullion quotes, also extending their incentive for new deliveries. Latest data say that COMEX-approved warehouses saw silver stockpiles swell by 0.3% on Tuesday, while gold holdings grew by 3.0%. London gold bullion today fixed above $2,716 per troy ounce, the highest 3 p.m. benchmarking since the day of Trump's election win, and 1.1% higher for the week so far in dollar terms. Euro gold, meanwhile, fixed at a new all-time high near €2,643, and the UK gold price in pounds per ounce set a fresh record close to £2,230. London silver peaked at $30.91 per ounce, like dollar gold, the highest since mid-December, as platinum rallied but held almost 3.0% below Monday morning's 8-week high of $974 per troy ounce, and sister autocatalyst precious metal palladium edged back to $955, down 1.8% from yesterday's US inflation data spike to a one-month high at that same level. Please like this video and subscribe to our channel.